Okay, Maureen, perfect. Help. Great. Thank you for sharing. Got it. And I think that this is really cool because it is possible, you know, like, okay, there are certain folks out there who would say that, okay, no, this is a way of seeing the world that, again, it's all about perception of that this is creating stability. 100%. So again, there is no right. This is where we need to collaborate and just be following democratic processes. And that's kind of all we've got, regardless of our opinions. So how will investors and potential immigrants view this? Some may decide that they want to come to Canada even more because they feel that it's helped our viewpoint and our stability. And others will say, you know what, I'm not quite ready. I'm actually going to pull out. Making sure that we go through all of our due processes. And how does the invocation and revocation impact Canada's real estate business? Helped or harmed? Okay. Maureen, the War Measures Act, the predecessor to the Emergency Act, yep, exactly, was invoked in the 70s and did not cause long-lasting effects. Perfect. Exactly. These are the kinds of things that we want to be thinking of. Catherine, global opinions and news media feel Canada has no leadership and its leader is weak. Yeah, there's certainly some short-term harm, longer-term help. Hugh, well done. Okay, so how does the invocation and revocation impact Canada's real estate business? There you go. Short. That's very quick. So a little bit of harm in the initial, and now okay, longer-term this will help. All of these answers are completely right. Everything you say right now is completely right. And the final question I have for you is, how do you feel? And genuinely, I'd like to know the answer. Concerned, confused, frustrated. Thank you, Anita. Catherine, I was International Margarita Day yesterday, so happy to be in Mexico. I hope you got a margarita in Mexico yesterday. Ryan, yeah, okay, concerns about the leadership, if you will. How else are you feeling? Embarrassed. And every cloud has a silver lining. Yes, there are opportunities. Yeah, Christian bothered that the feds and the city government were asleep at the wheel and unable to manage this. This was certainly something that was there was a long lead up to this, certainly. And you talk Duncan and Leanne about thinking about leaving the country, and that's exactly like one way or another, helped or harmed. There has been a change in Canada's position. There's been a change. Now, whether those effects are long-lasting or they are short-term, something has shifted dramatically in those, and that will impact our real estate because we're either going to have people leaving the country or fewer people coming in, or just a shift. And maybe some people decide that they really want to come in because of this. So we don't know. I'll move along, but I hope you trusted that this is a topic that needs to be discussed. And ultimately, the general conclusions of Canada's Emergency Act and real estate, I would say, is that regardless of the invocation and revocation, the entire situation is unfavorable for real estate investors, businesses, rental and property markets for the time being. It has sent a precedent for invoking and revoking. Okay, so that means, you know, that there could be something that could come again. Our stability of our nation and our democratic processes and our identity as communicators and polite, respectful communicators has been tarnished. It's certainly been called into question, no matter which way you look at that. I would, for me, would want to see a little bit more stability and a view of the actual impact about this before going on a real estate buying spree. That's all. Just that is me, my personal opinion, because I want to see how this unfolds a little bit. That does not mean that that's the answer for you. So, but it will impact real estate in one way, shape, or another. And it may be just infinitesimal. It just might be a tiny, tiny component. But in other words, this is something that we definitely need to be keeping our eyes on. And please stay tuned, because I will be watching this situation and how it impacts us as real estate investors very, very, very closely. So thank you all. I'm glad, Louis, that you found that this was an excellent topic. Wow, our country. So that is why I chose Courage by the Tragically Hip as our opening song, because we all need a little courage and a little compassion. And that song is actually written, it's called Courage for Hugh McLennan. And he's an author, and it's about Canadian society being free. So free and having a good society. So there we are. That's all I got on that
Jennifer,
topic. Yes.
I'm going to come in on this just for a minute.
Sure.
You know, it's really interesting to me, the responses that came up in the chat, because it is really a picture of how I think that Canadians are feeling. There is, at the end of the day, regardless of what your political bent is and what your opinion is, at the end of the day, there seems to be a growing majority of people who feel confused, who feel conflicted. And most of all, people feel like they have lost, there's a lack of, a decrease in the level of confidence in the leadership that surrounds us. If anything, the last 2 years have taught us is that leadership that we expected to be strong does not always behave in a strong manner, in a well-rounded manner. And as a result, people, I believe, have lost their faith in the powers that govern us. Given that, Jennifer, I think there's a great opportunity for us as real estate investors, and more importantly, as leaders within our own sphere. Yes. Here's what I find, that when confidence is lost, people look for safety. And when people look for safety in the money game, when confidence is lost, money starts looking for safety. And when you show up as a person who can have conversations, not just about how to make a property cash flow, but you can locate that conversation inside of the overall worldview and activity that is going on, you start to separate yourself from every other real estate investor. So those of you in this room, you're looking to joint venture, you're looking to partner, to grow your portfolio, to be next level. These are the conversations that lead to capital coming to you, not necessarily because you have a better process, but because you speak the language and address the pain and confusion that is already present in the community. So as the leadership officer, I just had to throw that in.
I'm so glad you did, Naran, and thank you for regrounding us in that. I very much appreciate it. And if I may, I'd like to actually just address Mark Amiot. You asked a very, very good question, and it's very important. Like, looking at this as a negative scenario, what could be the actual impact on real estate? And I love it. Like, these are the exact questions. Like, how much could it reduce immigration by? Let's say you put out a scenario of, let's say it's 10%. We would still have strong demand and low supply. 100%. Canada has a very incredibly short supply, so it may not affect the real estate world much at all. However, I'm going to go back and remind us of those first two slides back when we were talking about the Provincial Emergency Planning Act, in terms of rights and property rights and appropriation and things like this. I don't know. Also, as Naran eloquently mentioned, where there isn't stability, or certainly there isn't a perception of the right action, there you go. Money doesn't flow there. And that means that it could impact our economy, it could impact jobs. I don't know, Mark, but it wouldn't just be that 10% immigration necessarily, right? So what are all those other indicators that come into play? And so again, these are early days. It may not affect real estate at all, but we definitely need to be asking these questions, because political climate is one of those things that just like, wow, overarching all of our indicators and can wham bam affect anything at any time. So I just wanted to let you know that we're going to be watching this very, very closely to see if it does and how it impacts it. And yeah, Hugh, history has shown that real estate is a rock in both good and bad times. And that is the theme of the rest of today's presentation. So thank you, Hugh. So GDP, I'm going to get into all of, go back into the regular format, if you will, but that's a political kind of overarching theme that's going on. We're going to talk about GDP, jobs, population for US and Canada, and then the rental and property markets. And then we're going to get into that market analysis for Phoenix. So buckle up, ladies and gentlemen. All right. Combine, so we're going to switch gears a little bit, talk about the US. So combine and flaunt the strongest growth in 4 decades. This is interesting. So basically we're seeing recovering GDP after a massive crisis. It's not growth. It's growth, but it's not like this is why we talk about the net, and I'll talk about that in a second. We talk about net GDP at the Real Estate Wealth Lab. 2020 and 2021 saw the largest increase in federal debt in decades. So that's interesting. And real wages plummet. Consumers suffering while small, medium enterprises, SMEs, are seeing declining margins. So we 100% agree that growth rates must be reviewed in context. And this is why we do focus on net GDP, heavily on net GDP. It's not always available, but it is a more accurate picture. And we have seen the devaluing of currency by printing money and circulating money, which has created inflation. And these are headwinds to an actual recovery, full stop. That's a major headwind. And real estate, Hugh, exactly. Real estate is one of the best assets that typically outpaces inflation, and it does typically performs well in both good times and bad. So we do stand by our expectation of a very long, modest stabilization and expansion period all the way ahead, with potentially a small softening for the economic recovery due to inflation, to curtail that, and to reverse inflation, and then also potentially a slight softening depending on immigration patterns that we're seeing in 2020 and 2021. So that would be sort of in the 2023, 2024. But other than that, it's looking like a very positive long uptick for about 10 years. Dad. Dad, what are you saying? Because of the shortage of supply, the economy has to fail a lot before the real estate market will see the results. Slows the growth in price, but a long time to reverse the effects on real estate. Very well said. Okay, yes, exactly. So real estate's a good place to be. So then another forecasters see slower growth in the first quarter. So this is again US GDP. They basically put downward revisions on their GDP as well as their employment objectives. So they went from it was supposed to be 3.9% growth, and it's been downgraded to 1.8% growth in 2022 Q1. However, if you look at Q2, Q3, it starts sort of really normalized for the end of the year. So a little bit of a drop overall, but kind of making up a little bit of it in Q2 at the moment. This is based on the Federal Reserve Bank. And some other individuals actually. So here's another data set in terms of mean probabilities for real GDP growth in 2022. So because this was a survey of a bunch of forecasters. Oh, it was really good. Now I'm remembering the exact article. Like, definitely check it out in your weekly newsletter, Real Estate Intelligence newsletter. It was really fascinating. And this whole mean probabilities is like, okay, so here's the current one is the blue and the previous is the red. That's great. So most are saying that they're thinking sort of that 2.5 to 3.9 growth for 2022. But notice that there's still some outliers. So that's interesting. So this is what I love getting into, like the actual biases of various economic individuals and forecasters. So I just found that fascinating, quite frankly. So better dwelling. Now we're switching to Canada's GDP. The Bank of Canada also quietly revised its GDP forecast to show a larger housing contraction. So they're showing that housing is actually going to be a big drag on GDP in 2022, which is interesting because housing is a major component of Canada's GDP. So they're suggesting, though, that annualized quarterly GDP reached 5.4% growth for Q3 2021, which is a substantial increase, and it would have been even higher if housing didn't drag the growth lower. So here's what they're saying. Okay, so they're showing that the economy showed some strong momentum heading into 2022. This yellow here is what they're showing for the housing, just sort of that the right scale, and then they're showing that it's going to be a lesser percentage of the economy, and it's going to be dragging our GDP down. So what do I think about that? This is what I think about that. I said wait and see. I think that the Bank of Canada was probably overly bullish in their initial forecast. And just like we just saw, these other forecasters just downgraded, downward revisions, and that's really okay. I'm like, the housing is not about to like fall off a cliff. It's not about to not be a major component of Canadian GDP. So we still forecast housing to be a major factor in our economy and in Canadians' lives and budgets. So the housing market is still poised for long-term growth and expansion. I am really not concerned about this particular adjustment. We will be watching other forecasts closely. And then this one is fantastic. It is Canada's economy peaked way before the pandemic when measured per capita. So you'll recall just moments ago, I said that we really like to look at GDP at net. So the actual amount, is it improving? Because it's usually a percentage of growth. So did it improve enough to actually be growth, or is it just sort of like false growth because we're still underperforming? That's what I mean by that, the net GDP. So another way to look at GDP is not just the regular old real GDP. We got to get some context, and this is per capita GDP. So they're showing that Q3 2021 real GDP was up 1.3%, 3.4%, whereas per capita GDP quarter over quarter was up only 1.09%. What the heck does that mean? So really, it means that according to this study, nearly 1/5 of growth was due to the population, not the productivity. In other words, and this is a really cool graph, and I'll go into it in a little bit more detail, but we want to be watching this red line. The red line is real GDP, and per capita GDP is the blue line. And when the blue line is above the red line, essentially that means that we're being pretty productive. We're not relying on our GDP to be based on population only. And so what's happened is that real GDP has gone above our per capita GDP, and that's where we start getting into less of productivity. So the conclusion is it's still growth. So there we are. Canada's GDP is still growing. It's just a little bit less growth. But it is important to look at what that means. So population, not productivity, is leading GDP growth. So that means there's room for improvement in our economy. It's nothing to be overly concerned about right now. If this continues as a trend, however, it would be something to better understand in terms of our economic activity and productivity. And so again, this is why we look at net GDP, and we have never accepted at face value, and certainly not from one source, looking at multiple sources with their biases in mind, we've never accepted the GDP, which is quote unquote a vanity metric, according to other sources, at face value. It is a leading indicator for rental and property markets, so we want to have as accurate a possibility as we can see so that we can forecast our rental and property markets 1 to 2 years down the road. And that's a general rule of thumb. However, things like political climate, for example, immigration, things like this can make that duration either shorter or longer. And that's what we've got for you when we do our city-specific analyses. So another sign of an incredibly long, slow, modest expansionary phase in real estate for the foreseeable future. So all things are good for GDP for both the US and Canada, but you'll see that they're very, like, I can't even get that arrow on the blue there to go down just a little bit, but regardless, it's in the right direction, and that is definitely good news. So jobs, we're going to start with Canada, our January 2022 Stats Can data. Interesting that January 2022 participation rate is higher than January 2021, just by a slight little bit. But here's where I really think is helpful. Here. So the Canadian economy, pretty much job market, I should say, at our Real Estate Wealth Lab Research Lab last January, we went into this like in a lot of detail. But essentially, we reached our pre-pandemic job market. Like, that pretty much has been gone through. If you haven't seen that presentation, I highly recommend it. Not for my benefit, but for yours, because it was interesting. And we saw some cool data on jobs. We are seeing that slightly trending down month over month, which is interesting, but I like that this table really starts to show where we were in December 2019, which is our labor force, and our employment rate and our participation rate, of course, but the labor force was 20,248. And in January 2022, so full pre-pandemic to now, January 2022, our labor force is 20,517. Our employment rate, I mean, 60.8% versus 61.8%. That's pretty close. It's only 1% difference. And I mean, actually by numbers, that would be probably about the same because we've gone up in terms of our labor force. There you go, size-wise. And then participation rate also 65% compared to 65.5% back in December. So this is, again, a slight monthly downward trend. Not too concerned about that because all in all, go Canada. We've hit it with the job market. So I haven't seen any of those headlines about the labor shortages. Have anybody seen any of those lately? I wonder where that narrative went. Huh, I really haven't. I mean, just very genuine. If anyone has seen anything about labor shortages recently, I'd be very curious. I have not. Okay, well, anyway, U.S. Bureau of Labor Statistics. So moving into the U.S. economic news release, the state job openings and labor turnover summary. Basically, this particular release, and it's in your newsletter, which will be out today. And it has all of the job openings, hires, separations. It was done on a DOS computer for sure, from like a Commodore 64 or something. It is not a pretty picture in terms of like how it's put together. It's funny. It's really funny. But it's got some information in it if that's where you're wanting to. I did not put the graphs on here because they would blow your mind. I should have, because they would blow your mind. So anyway, the conclusion is that there is not much change between November and December. There is growth, though. That's good, and meaning that real estate will expand as well. And here's some of the various numbers. So if you don't want to go back and look at that release, you don't have to. So similarly, again, with the sort of jobs, pretty flat, not a whole bunch of growth, but certainly it is growth. So it's just modest. It's just slow. So there we are. I'm just reading, Catherine, how accurate the labor stats are when people lost employment due to mandates are not being counted in the unemployment. Oh, I don't know that for sure. That's interesting. I'd be curious if they're not being counted. Oh, because they wouldn't be in the unemployment data because of the way that they were classified. Is that what I'm hearing? Huh. Interesting. I don't know. Huh. So people, now we're moving into another leading indicator, which is always so important. And we're starting with America, the states. Americans are leaving and where they're headed. So this is very similar in, we have the U-Haul report, both in Canada and the US, which shows where people are moving. United Van Lines does their own study, and this is their 45th annual. And work was still the #1 reason why people moved. However, the shift, this is important. The shift is while it's #1, work is #1, a new migration trend has occurred, And that is that people want to live closer to their family, and that is in part influenced by the restrictions. People want to be able to be close to family. So that's now at 32%. Now, I love it. So where are they headed? Where are they going? So Cotton Eye Joe, anyone? Do you remember that? Where did you come from? Where did you go? Okay, so why do I sing like this crazy girl here? Because this is important. It's an opportunity versus a risk. So this is a cool study that tells you, okay, where did you come from? You've got your inbound, people are coming here, cool. But also your outbound. Where are they going? So where did you come from and where did you go? Because you want to know, one is risk and one is opportunity. So I'm only showing here the inbound moves, and Arizona is highlighted. And yes, you will see that there are doubles, like 18, 10, 10, 10s, and some threes. Those are ties. It's not a typo. So just so you know that. But yeah, so here's some of the, like the number one inbound moves, Vermont. Okay, if you're thinking about investing in Vermont, you'll want to check that out. I don't know the other factors, but that we could maybe do a market analysis on that. Why are people moving to Vermont? South Dakota, South Carolina, Florida, number 5. Idaho, I mean, Boise, Idaho is the highest ranked real estate in the US, and they have great fries, which I appreciate. Boise, Idaho Fry Company, fantastic. And Arizona. So Arizona is 54%. So we're going to talk about Arizona a little bit. That's why that one's highlighted, because you can see that there's trends that happen. So the U.S. president's economic strategy explodes public opposition to migration. What? Okay, this is interesting. I don't need to, I think I should probably go to the next slide. It'll be probably easier to say, but 9% of Americans want, only 9% of Americans want more immigration. 35% want less immigration. Now, this is according to a Gallup poll of 811 adults. So what, like, does 811 adults actually really constitute like a fairly sizable data set? I don't know, but this is what it, thank you, Jan, I concur. It doesn't, I think it's a little bit too small of a sample size, given that it's a huge, huge, huge country. And immigration is a pretty impressive and important topic. So regardless of this data, it's interesting, you know, are people wanting more immigrants or not? It can affect policy. And in an era of public opinion poll politicking, I just said that, you know, maybe this would have some impact on potential policies. I don't know that, and I'm not suggesting it should, but I want to point something out, and this is a quote: the extraction migration economic strategy. So this is within the article, it talks a lot about this and what extraction migration economic strategy is and what it means and why it's important to you as real estate investors is because it is about expanding the nation's consumer economy with more cheap workers, high occupancy renters, and government-aided consumers. So this is a strategy that some governments take, the extraction migration economic strategy. Canada, I would say, is partially this. However, they've got it at a different level because they target more of the economic class immigrants. But this concept of high occupancy renters is very interesting, and those would be customers. So we just want to keep that in mind. Immigrants need homes and rental homes to start, so they could be potentially your tenants. And at a minimum, again, this is an American policy, so not, yeah, strategy, I should say, economic strategy, is at minimum they would increase the pool of potential clients, whether their immigrants are specifically your tenants. In other words, it increases the demand for your total product, the rental market, and therefore your prices would be pushed upward. It would be easier to fill vacancies, et cetera, et cetera, et cetera. So it is neither a buy or sell. It's only FYI only. Again, it's a very small sample pool, but what's interesting in that article is about that actual strategy, the extraction migration economic strategy that could be truly fueling the rental market and real estate market in the US. Now, on the flip side, in Canada, this is an awesome infographic. They're just great. So way to go, Stats Canada. You did a good job. Immigration, I should say, Canada. Just showing some of the data points and whatnot. So whether you agree or not, immigration is good for real estate business. And why do I say that is because there's also a lot of debate on whether or not immigration is indeed good for business, or the economy, I should say. I'm not here to debate that or have that conversation, but it certainly is good for real estate business. Because more people means more demand for a short supply and a place to live. So with low supply, all that puts upward pressure on prices. So that's all very important. But, right, back to this, and just referring back to that political climate section. Again, I don't know if there's going to be any impact. It may draw people to Canada even more. So what we need to just be looking at is that net impact. Where if there's a decreasing population, would there be downward pressure on rental and property markets? Yeah, maybe. But are we actually likely to see that? No, not very. So again, just stay tuned, something to have in the backs of our minds. So population on the whole, I know that Canada's targets are massive. And I do actually, I'm going to go back to this. There is a lot more to unpack in this particular thing. We have limited time, and last time I went 2.5 hours, so I'm trying not to do that again for you this time. So this is in your weekly newsletter, and I actually unpack it quite a bit more, especially when it comes to the target. Please look at the target here of the 2022-2024 immigration levels. So up to 451,000 in 2024. So pretty consecutively increasing. And like I mentioned also that 60% of admissions are in the economic class in Canada. Again, that's different than that extraction migration economic strategy that the US typically employs. So something just to keep in mind in terms of who your clients can potentially be. All right, inflation. I am not doing a deep dive on inflation. It is rising, rising, rising. We've talked lots about it at all kinds of other research labs. So that at the heart of it, as many of you know, at the heart of rising inflation is monetary policies that printed money, circulated it to individuals, and that is literally the only cause of of inflation. And I have much more to say about that. For real estate investors, and I think Hugh, you popped it in the chat about silver lining and opportunities. Here you go. This is a silver lining when it comes to inflation and all the scary stuff out there, what's going on. Real estate is one of the only assets that historically outpaces inflation and performs well during times of inflation. And so it is a big, big mitigator of risk. And it's a hedge against mammoth inflations and all of these things. So this alone, despite everything else that I've even said today, even the political climate, is a buy signal at this particular juncture. All right. It's definitely a hold signal. All right, so the Conference Board of Canada, rising prices stifle Canadians' confidence. So the consumer confidence fell 7.6 points in February. Which is so saying that only 11% are positive about the current financial situation. That is not good. That is definitely below the pre-pandemic outlook. And I want to read this quote from their report. Rising inflation further erode consumers' confidence as they spend less and save more. Falling real wages could also see households' confidence dwindle as they adjust their consumption habits to tackle inflation. So as inflation, what that means is as inflation takes hold even further and longer, Canadians will, it makes perfect sense, and Americans too, will tighten their purse strings, rightfully so. Eating beans instead of steak. These are choices that people ultimately do at some point need to make. And that further would entrench the inevitable recession. And that is, unfortunately, one of the only ways out of an inflation scenario is to experience some form of a recession. Does it have to be a big one? No, but it will impact employment. That's typically the only way out, other than, of course, interest rates, but that causes the same outcome. So real estate is one of the best assets. We've talked about that a lot, but I want to give you that silver lining always. And then jumping into the rental market for the US in December 2021, they're up. Oh, I've got a really good one in just a second. Yeah, okay, so they're up. I'll go ahead. Why your rent is going up. This is fascinating. Okay, I know I'm jumping ahead. We know rents are going up, but in cities like Florida, they're like, cities, sorry, that's a state, but there's cities in Florida that are going up like upwards of 30%, et cetera, et cetera. Most are not. They're sort of saying 3.5 and 13%. It's kind of like the annual rent growth, but this is cool. I did not know this. So most rent reports apparently, and this is not gospel or anything like this, I will definitely look into it further, but apparently most rent reports don't include renewal rent rates, which are lower, right? Because if you're renewing, typically you don't go in and get your brand new market rate, you're only kind of raising it a little bit within market realities or within rent controls, whichever is available. Or they don't include mom and pop properties. So they have higher rent rates because it's not showing the renewals that are lower. It's not showing mom and pop properties. And 60% of rentals in Canada, if not more, are mom and pop properties. So that's interesting. Whereas CPI data reports does include a survey of sample of renters from all kinds of buildings, asset types, including mom and pops, and includes renewals. So there are lower rent rates. So that's interesting. So just in terms of how is that data captured. But regardless of the rent data, it is where it's coming from and how it's curated, it is a hold signal. This is definitely going in the right direction. February, switching over to Canada, similarly, the average rent is up annually as well as month over month. I love this graph. So I hope you do too. What this is showing is the average rent for all property types by month from rentals.ca. And it's according to their listings, by the way, so it's not everything, but it's an interesting, what we show for our real estate cycle formula is that typically rents are impacted about 1 year after an economic growth spurt, will go up, or a decline, they'll go down. Typically, that's approximate. And guess what we had, of course, in April 2020, we had the largest drop in GDP ever due to the government restrictions imposed due to the COVID-19 situation. And exactly 1 year later, the data points show, hey, it pretty much hit April 2021, all-time low. Guess what? We started to see GDP starting to come up, some growth, still not net amazing positive growth, but getting into the right direction and starting to rise. So we are gaining back just about getting towards pre-pandemic rates in terms of rent rates. So these are buy and hold signals. This is good that we're moving in the right trajectory and the economy and the leading indicators remain in place to show that for a long time. Moving into the property market. And then this is in Canada, the Toronto and surrounding areas need 30% more new housing units per year to meet demand. Nothing new here. We definitely know that. But it was an interesting study for sure. Demand continues to outstrip supply for US real estate. Same. So they're saying that this particular study, 26% year over year, that inventory was down. So again, these are buy signals because when we've got an imbalance of supply and demand, and when we've got an imbalance of supply and demand, what will happen is that will put upward pressure on that property and those prices. So all in all, what it means is that home prices have nowhere to go but up. So then back to our conversation earlier about political climate and the questions of like Mark that you were asking of like, well, how much kind of could that even impact? And we don't know, but ultimately when it comes down to the supply and demand side of things, and you add inflation, there's even going to be more upward pressure on real estate. So for the foreseeable future. Now, that said, again, go ahead.
I'm going to jump in here just to clarify or ask a question. When I look at the data that you're presenting, it seems to me it's obvious that real estate is the best asset to get into at this time. Now, you mentioned consumer confidence. Is consumer confidence lower right now? Is it being driven by actual numbers, or is it being driven by the narrative that kind of exists in the atmosphere?
It's probably both. I mean, that would be the realistic answer. However, it's driven by actual numbers. So the dollar doesn't go as far. And like I said, individuals are making, and I come back to like steak or beans, but individuals are having to start making choices like that. Without the wage inflation that's not keeping up with inflation. So your wages don't go as far as they used to, and the money, you need more money to live. And that impacts consumer confidence. And it impacts, I mean, that view of the stability and future finances of Canada and of the US really right now, it's not very high. So, does that answer your question?
It does. Thank you.
Awesome. Cool. And oh, there we are. So we're almost at the end of this section. So our conclusions for our market analysis, our macro market analysis for Canada and the US, is that in Canada, we've got to just check out this political climate, full stop. All of the other indicators, as previously mentioned, are still showing exactly what we're going to show in the US. I'll get to that in a moment. So notwithstanding that, it is a long-term expansionary period, slow, modest growth, with the exceptions of potentially a slight softening in 2023, 2024 for inflation and for immigration impacts, potentially. So it's a buy and hold. It's buy and hold, or hold what you've got. So one way or another, now is a great time to be in real estate and to keep your portfolio stocked. Watching how back to Canada, other than that, because it's the same for Canada, except we just wanted to make sure that the perception of how the Emergencies Act is being navigated, how that plays out, and then we can fully determine if it has any impact on our real estate. So, thank you. And now, Naran, any other questions? I see Spring, you asked about the 405 for Canada or the US. It was 451,000 immigrants for Canada in 2024. And just a little bit less than that each year. So around 430,000, I think, for each year between now and then.
That's a lot of information, Jennifer, and thank you. You know, I was thinking to myself, while you grab a drink there, well-deserved drink, I was thinking that given that consumer confidence is down, I think, again, it allows us as people that provide housing to actually enter that conversation. So while rents are continuing to go up, if we were even to couch it that, you know, we provide, say, LED lighting to so that the cost is less on the client, that those things like that, it actually enters the conversation that's already going on in their minds and sets us apart, and at the same time provides real service in real time.
I love that. I love that. Being really proactive and giving wonderful service to our clients while also solving their problems and ours. That is leadership. That is win-win. So thank you for sharing that, Naran. Really appreciate it. And I love that you said just have a drink. I just want to acknowledge this is water. And Jan, I would like to say a huge thank you for those beautiful gifts. I did not have a teacup at my hand, and Jan actually sent me 2 beautiful teacups. So I will be able to have tequila in a teacup later on, or just tea. But at any rate, so thank you. Really appreciate it. All right. So we will now get into the market analysis for Phoenix. So pop it in the chat. Who here is investing in Phoenix now, interested in investing in Phoenix, or would like to? So currently, or who doesn't care? Pop it in the chat. Phoenix folks? Interested, right on. Yes. Okay, great. Okay. Interested in the conversation. Okay, yes. All right, let's go. All right, on it. All right, so the GDP in Phoenix. I can't wait till I get to the last slide of this presentation. So Arizona was one of the best performing economies in the US during the pandemic, full stop. So it was up 3.2% net GDP. You can see that in 2020, US GDP was down 3.5%. Arizona only went down 0.9%, and its forecasted growth is it's already out, like well out of the hot water there. It was barely ever in it. So I mean, that is a major statement, one of the best performing economies in the US. But that doesn't mean it's going to be going forward, but here's some fun news about maybe what will help support it. So who watched the football, the Super Bowl? Yeah, a few people. That was my birthday. And yes, I watched the Super Bowl on my birthday, but I recorded it and watched it later. Yeah, so the torch goes to Arizona for the Super Bowl next year, February 10th, 2023. Mark it on your calendars, go and visit because it's the fourth time and a Super 10 party. Yeah. And this is their fourth time hosting the Super Bowl. So we've got stats. So 2008 Super Bowl produced 90,000 visitors and 500 million in Arizona, according to this article. 2015, 150K of visitors, 150,000, pardon me, 720 million. And then 2023 is expected to be an even bigger impact to boost local businesses. And as restrictions, government-imposed restrictions are removed, I bet you there's even more people who are going to be wanting to go and party at that thing next year. Who knows? Time will tell. But as you know, I don't take anything at face value, and I happen to get to have one of my professors in my master's degree studied the Olympics and the impact of Olympics. So I'm a little skeptical of these kinds of numbers, and apparently I'm not the only one. So an economist, this is Victor Matheson, he says the estimates of Super Bowl's impact are often exaggerated. So it might not be 720 mil, but he says that it's about maybe 30 to 130 million. And you know what? That's okay. It's still revenue. It's still generating something. And even if it's not so high, it's also definitely contributing to putting Arizona on the map. More people will be talking about it. There's certainly possibilities of short-term rentals to, Super Bowl attendees. Other long-term outlook is very positive. Forecast for the state economy projects solid growth. So the Arizona economy should grow, led by Phoenix. By the way, Phoenix is the number one, which is important at the city level, is the number one city in economic generator for Arizona, and it's growing at a solid pace. And housing prices will avoid a crash. Well, there's not going to be a crash, but despite recent price surges. So there is nothing like that. The economy, so this is Tucson.com. You've got this in your weekly newsletter. It's 9 charts that show how the economy is performing in Tucson and Arizona. If you're interested, you'll definitely want to check these out. For ease of reference, I'm giving you a little tip here so you don't have to look it up on Google if you don't know it. Phoenix is in Maricopa County and Tucson is in Pima County. So these are major graphs, majorly interactive. I'm not going to go through them, but you definitely have that link so you can do further diligence and just check out how's Maricopa doing. It's very, very cool. So I'm highlighting that for you. This is one example of the data. So the person's not in the labor force who want a job. It's updated regularly. Like that was just updated on February 5th, 2022. So keep a link to this. These stats are fantastic. Tons of data. It's mostly about jobs. So there you are. But do check it out. It's a ton of fun. And now another headline, again, showing that the economy is poised for growth. Here's how Greater Phoenix Economic Council has helped Metro Phoenix economy flourish. So there's a whole group a whole article about what they've been up to. Well, guess what? At the end of the day, the Economic Council is sharing that they're very open for business. And they are actively, and you want this as the political climate, you definitely want this in your market analysis so that you're going into great cities, and they are actively attracting not only top tier e-commerce, but also people. And remember, go back to that it was way back when we saw the inbound moves into all of those top states. Phoenix is number 18. So they're saying that they're doing this, and they're having the right actions and the right results. So that's good. And that they're focusing on their fundamentals of attracting businesses. There's mega projects that are set up in the Metro Phoenix region, etc. So jobs. Oh, thanks, Brian. Take care. Get the recording in the member portal. So again, for jobs, similarly, Arizona again was one of the best performing economies during the pandemic. So it's recovered. It's recovered and surpassed pre-pandemic numbers. So that's fantastic. And these are all, you'll see the buy signals. These are like buy signals on almost every single one of their metrics. In fact, all of them. So unemployment rate, you do want to see this going down. That's why it's down, but that doesn't mean it's a negative thing. It's an inverse relationship. So it's on the right trend. Let's put it that way. What's interesting is that Phoenix has previously had you want to look for a diverse economy, and previously it was a little bit more based on construction and real estate, and this has now shifted even more so into science, technology, finance, healthcare, leisure, hospitality. The more the diversity, the better for definitely mitigating risk. So another buy signal. The Arizona economy nears pre-pandemic norms as unemployment rates decline. So, okay, very good. Arizona operating at 97% of where it was in March 2020. Arizona economy is ranked the 5th best in the nation. And Arizona is doing more than most states for job growth, 95,000 new jobs for 2021. These are all incredibly positive outlooks for the economy, which means that it's good for your real estate. So you can see in this particular graph, we're really like in a very good situation. It's pointing to major recovery in jobs. If you can see this unemployment rate chart going down like that. So then when it comes to people, as I mentioned already, it's number 18 in terms of inbound moves, according to the Van Line's report, but it's also been on other reports, the U-Haul report, etc. So there's no secret here that whichever company they're using, they're moving to Arizona. Check this out in terms of the 2021 population growth rate. US was 0.1%. Arizona was 1.7%, and Phoenix outpaced them both at the state and the national level at 1.8%. In 2021, their total population reached 4.9 million. That's Metro Phoenix. And that is good. You want to be looking for, big cities like this that are affordable. I mean, it's just, these are all the right metrics, all the right times. So there again, another article reiterating the data and whatnot in terms of its population growth and 5th largest by city population, etc. This is another fantastic graph showing the 10 fastest growing US cities. So again, there's not much more to say other than the population is growing and it's one of the fastest in the US. So revitalization. Oh yeah, okay. So here I wanted to talk about this because I've looked at the real estate market in Phoenix. I went and did some diligence there, specifically, I think it was last year. Yeah, it was last November, something like that. And I was looking at multifamily apartment buildings there and checking out the neighborhoods and doing my diligence as well. Fan-freaking-tastic, fell in love with it. However, I had one question that I needed to find out for myself, and it was water infrastructure. Oh, so it's just a little yellow flag that water is an incredibly important, okay, by the way, Phoenix has exceptional infrastructure. Like it is the best I've seen in any city, in anywhere in the US. I'm not kidding. I was blown away by its infrastructure. And I asked all the questions about water, and they seemed to be answered appropriately. I wasn't too concerned about it. And then I saw that this article came out in February this year, and Arizona is now enduring its worst ever water shortage. This isn't a local opinion, by the way, so, but it is a high priority for a desert city to have those water issues, and that there's some interesting things that are going on there. So I would want to, it's not it's not a red flag by any stretch, because I am confident that in a city of 4.9 million people, that they will definitely, and with the infrastructure and the money and the influence and the businesses, that they will certainly be able to, ride this out and create a positive resolution for individuals. So then moving into so there's not all positive all the time, got to get in all the pieces here. So the rental market. So again, the rents are on the rise. It's one of the hottest rental markets in America. The landlords are soaring, vacancy rates low, the lowest it's been in 20 years at 3.8%. So again, all these metrics are pretty clear in terms of buy signals and moving in the right direction. Again, we want to always base our judgments on our leading indicators, which are typically sort of population or people moving in, jobs, economic activity, etc. So all of those are clear and moving in the right direction, because those push the rental and property markets further down the line. So this is in for the long haul here, folks. The rate of rising rent prices in Phoenix could suggest consumer changes. So again, consumer changes as in people are moving to Phoenix. So nationwide, 10.1%, Phoenix saw an 18.8% increase. Phoenix degree of outperformance widened. So apparently Phoenix has often outpaced national growth rent, so nothing new there, but the gap has certainly widened if you look at the orange line versus the blue line. And there's some submarkets. So because Phoenix is Metro Phoenix, and then there's I curated a little list based on my experience and my diligence that I did on the ground in 2021. And you'll note here that a couple of places are listed: Chandler, North Glendale, and Gilbert. That is from this article, and I'm going to add to that, I think, on the next, very shortly, in this presentation. Now, when it comes to, here are the multifamily markets poised to outperform in 2022. Multifamily also. Phoenix is top of the list. Las Vegas, Tampa, Tucson, and Albuquerque. So lots of growth there. That's looking good. And I want to, what's in store for the Phoenix housing market? Strong streak. It's continuing to go. It's a seller's market for 2022. Buyers should be prepared for rising prices and bidding wars. And why? Because exactly all of the metrics, all of the leading indicators are in really good positions. And Phoenix sales activity. Let's see. So the sales are down 22.8%. This is the story that we're seeing everywhere, is that sales are down. Sales are down because inventory. There isn't enough inventory. We've got a lack of supply and higher demand. So while this is so unusual, but while sales are coming down, it's not a normal indicator that there's no activity. It's simply that there is no activity or no demand for it. And so actually prices are going up while sales are coming down. So don't let these freak you out. That's not it. But in terms of having multiple bids and whatnot, that is something to consider. Home values are up, rents up by 25%, et cetera, et cetera. And again, I do go through this. I just want to acknowledge that I am going through this very quickly, because I want to, acknowledge that some of you are interested in Phoenix and whatnot. And this is a lot of data, but this is really for you to come back and you can use all of this data, all the sources, whatever have you, and use them in your presentations with individuals that you may be, or in your market diligence, of course. So again, for sales, we're seeing sales up, just generally speaking, all across those are the prices. So the actual sale number is down, but prices are going up. Inventory, month supply is 1.28. I'm pretty sure I recall, and this is in Canada, but Christian, I think you were saying that the supply of inventory, someone else who can answer this, is like a normal supply. It should be like between 3 to 6 months of inventory is a balanced market. So 1.28 is extraordinarily low. The Arizona lawmakers introduced a bill to improve housing affordability. So they're going to be, it's good. They're going to be why it's good. Why it's good for real estate investors is because they're going to be streamlining bureaucratic processes for building homes. And that is great for investments, for doing diligence, for doing development as well, and adding more supply. Now, I promised a list of some Metro Phoenix cities to check out. This is not exhaustive. There's lots of other great locations, and I personally visited many of them. Chandler is growing like crazy. North Glendale, Gilbert, Tempe. I don't know if that's how you pronounce it. Tempe. That's where the Arizona State University is, and really close to the airport, really close to major critical infrastructure, really close to downtown Phoenix. I was blown away. Oh, Tempe, Jan? Tempe? Okay. Thanks. And Mesa. There's lots. Scottsdale is fantastic. Probably many of you have heard about Scottsdale. However, it's already like it's pretty developed, and so there's always opportunity. Just do your diligence. These are not exhaustive, but I just wanted to give you some ideas of what to check out. And for the conclusion, for Phoenix, ladies and gentlemen, bringing it in for a landing. There. That's it. That's all I've got for you. That's the biggest buy sign I could fit on this. Every single leading indicator and lagging indicator. I see Natalia, you're smiling. Yeah, exactly. So this is a great time to buy. It's a great time to hold. And there's definitely opportunity there for sure. And then in conclusion, just reiterating where we were for Canada and US, buy and hold, long-term expansionary periods coming, slow, modest growth, and just have a little eye for what's going on for Canada. And again, please invite your friends, join us, help our community grow. I'm so delighted that Graham joined us tonight for the first time. Welcome to the community. And make sure you join our next live events, the second Wednesday, the third Wednesday, and the fourth Wednesday of the month. We've got some cool stuff. Actually, we're going to be following a little bit of a theme this month. So we just talked about the Phoenix market, and now we're going to be bringing in a market leader from a Phoenix market. So how do we actually take action in Phoenix right now? That's what we'll be having, and then our community lab will be diving further into that so that we can take advantage of the market analysis. Now, if it said sell, we wouldn't be bringing on someone from Phoenix or in the Phoenix market to talk about that. So definitely very exciting for folks to come and join us. And yeah, please reach out to us. And I'm going to open the lines for just any conversation that we may want to have with regard to Q&A, et cetera, et cetera. Mark, you're asking for an average cap rate in multifamily in a standard neighborhood. I love that question. I have it on a spreadsheet and I don't remember it, but I definitely did a cap rate spreadsheet. I can pull it up if I can find it, but I can get it to you. But I don't remember it off the top of my head. It's from a year ago, sorry. Maybe someone else knows. All right. Well, thank you again, everyone. Catherine, do good research on neighborhoods in Phoenix. Depending on the neighborhood, you may have much higher property taxes for things like, yep, very good. Do your neighborhood diligence for sure, and definitely ask questions as well. Eve, good questions about the Emergency Act. Only the government has the answer. Very interesting. Mm-hmm. Well, how do I want to respond to that? Maybe I'll just remind everyone that the government works for us. I know that sometimes we may forget or whatever have you, and that may not be a popular belief, but it is. And ultimately, as they're politicians, so their business is politics. Their business isn't business. Business is politics. Their business is being voted in and keeping their jobs. They're very vested in keeping their jobs. So as a result, as Canadians, as citizens who vote, it is literally, we can make a change and we can influence government to do what we want. And a couple of questions that have been brought to my attention, no, actually I brought them to my own attention, I'll be really straight up here, is like, where have referendums gone? You know, it's one thing to have opinion polls, which there's no way to run a country, but what about putting some of these things up for referendum, given that politicians are indeed about keeping their jobs, and that's their focus. Therefore, we do have an influence. And if we don't have an influence, then we can certainly have and ask for referendums. I remember having those lots when we were younger. Who's going to Phoenix? Sorry, go ahead, Narayan.
Jennifer, I was just going to say that I need to leave because I'm catching the red eye to Phoenix in a few minutes. So
right on. Okay. But, hey guys, oh my gosh, let's do it. Let's do like some sort of on-site. I'd love to meet you in Phoenix. Okay? Who would like to do some form of like real estate summit, get together, bus tour? Yes.
Bus tour.
Anywhere in the US right now. Florida, Phoenix.
I'm in.
Pop it in the chat if that's something that's interesting to you, and you know, maybe that's what we just got to do. Okay, well, I wouldn't have this ready for March 1st. Hey guys, I know that we're the dream team for sure, but so you can go to California, Allison, and then come meet us at another time. So Florida, yeah, I would love to. Texas, okay. Well, I think we have some marching orders. That would be fun. And yes, and Hawaii, of course, too. But yeah, that would be great. I will put that to the team. Hey guys and gals. Yeah, it's about time that we get connected and hang out. And I'm a big fan of bus tours and getting our hands, you know, like seeing projects and getting a feel for the neighborhoods. And I mean, I learned so much just going to Phoenix last year and understanding how that market works and what's important to people and whatnot. So, so you're not catching the red eye tonight, Naran.
No, but Jennifer, I do want to say in conclusion here, as we wind the call down, a couple things. One is that if you have some comments to make, you know, feel free not just to put it in the chat, but we can bring you in, I think, Jennifer, into the call to have, you can speak to us and to the group directly, for those of you who are so bravely inclined. The second thing is, Jennifer, every time, like, I'm always amazed at the amount of content that you bring. And it's not just data, it's extrapolated out into what does this mean for me as a real estate investor and a leader in my field. And thank you for that. That was a lot of information that was well articulated. Lastly, I want to say that those of you who are in the room, I'm noticing in my conversations with some of you within this room and outside as well, that there's a lot of noise out there, and it is pulling and drawing our attention. Keep your focus, your eye on what is important. Keep your eye on what is crucial and what really, really matters. And that's done by looking at the actual data and by hanging out with people like you that are going to push your eye to what's crucial. Because when you do that, you get to turn up as different in this world as a leader in your field. And if ever leadership has been needed, it is now. So have a great week. I just want to say that before you all took off on me.
No, that's very, very true. And actually, yeah, and to take it one step further, I mean, thank you for being a part of this community and as a REWL member, and hopefully that can help to take it one step further, just like rely on us. Like, we are going to provide you with a sense of reality, and you can, you know, hopefully tune out some of the noise so that it frees up your brain. I will always, and we will as a team, always deliver the best that we can. And that's not to say don't do your other research and whatnot, but if this can be something that you can lean on in this difficult time, like Naran said, focus your energy, do what you need to do. And we've got you every week with our newsletter, and and you can always send emails in and ask questions, like, or on Facebook. Holy crap, there were so many individuals. I know it doesn't look like there's a lot of people out there, but behind the scenes, people asking me questions, and I'm doing my very best to answer them and to tell what I know of any particular situation at a time. So hit me up, hit the rest of the team up. They're all there too, and we can get you through that. So I do want to be respectful of people's time. It is 9:05. I think that's the first time I did it in 90 minutes. So I wanted to be respectful because I did go over so much last time. So I apologize. I made it in 90 minutes. If you do want to stick around for conversation, or if you want to stick around for Q&A, I've got time. So it's up to you. But the formal presentation is closed. So if you need to leave, that's just fine. Thank you. And my pleasure. Thanks, guys.
If you do want to come in and you have a question to ask, just raise your hand. We'll see you. You can use one of the actions to raise your hand. And
can they unmute themselves?
No.
Oh.
They raise their hand, and one of we need to unmute.
I see. Because I'd love to, if we can maybe get that going, that would be great.
I know Vincent's got something to say. I can see it.
And I see Duncan and Leanne are raising their hands.
Perfect.
Do I have the power to just unmute everybody?
Oh, there you go.
There you go.
Hey, guys.
Hello. Hello. How are you, Duncan and Leanne?
Hey, yeah, good.
Good.
We've been looking lately, doing some research on investing in the US. And one thing I've just been working on today was mortgages, financing for Canadians down in the US. Is anybody working on that right now?
Yeah. What do you mean by working on it? Know about it, or working on making it easier? Because it's not easy.
30-year mortgages, 30-year amortization with a fixed rate, and it's just a whole lot to get into right off the bat. But I've been working on that lately. Yeah. What's you guys' experience? Have you guys been able to get financing as a Canadian, or have you had to open up a corporation to pull financing?
Well, I love all these questions. All of the above. And I'll let other folks speak, but I'll speak to my experience. Is that the very first property I actually had to buy with, I bought it with a Canadian line of credit, and I bought it cash, quote unquote. I bought it cash because I had credit in Canada, and then subsequently I've been able to source. I had private financing for another one in the US, and then but I had that in a corporation, and then recently refinanced it under my personal name because they wouldn't even touch it with a corporation. It wasn't good enough. It would be like a 40% loan to value or something. And as a Canadian, I think I only got, I was able to get up to an 80% loan to value, but it does change in terms of loan to values. But one thing I do want to mention, and I'd like to get the time to actually create a glossary of all the terms that are different in US, because there are plenty, and what they mean and how they work. And because you're talking about the 30-year amortization and the fixed rate, I just want to also mention that can be really freaking amazing. So one of the things that I love about American mortgages over Canadian mortgages, and my very first property was in Detroit, by the way, when I was 23. And how did I get that? I got a traditional mortgage, and is my dad still on the line? So my dad and my stepmom lent me $10,000, and I got a mortgage in the US. And what I learned is that American mortgages are fixed for 30 years. They do not, and the term is 30 years, most of them, 25, 30, whatever you get. But the term is the same. So that means that you're locked in for the entire duration of that mortgage. That means that in 5 years from now, or 10 years, or whatever you lock in Canada, you're not up for renewal. That house
when
is
you're
yours.
done, you're done.
When you're one and done. And then I think that is, I mean, of course you can refinance and do things along the way, but if you don't want to, you don't have to. And I think that kind of level of stability and sleep at night is fantastic. And so actually a lot of people have been asking me questions, and I appreciate them, about like, well, what's mortgage rates going to do for the US Like if they go up, what's it going to do for the US market? And one of my responses is nothing. Think about that. If you literally can just pay your mortgage today for the rest of your life on all of your properties through cash flow or whatever have you, then just don't sell them. And it really wouldn't matter. Now, yes, it will impact individuals coming into them. I don't mean to sound flippant, but I'm only saying it in that way so that people can kind of get a different perspective of it, is that it may not impact in a big way. Yes, new homeowners and buying and things like that. Yeah, mortgage interest rates will be, affect that demand and affect the prices and stuff. But it also doesn't have to be such a major crisis if we put it in the context of this conversation.
Yeah, no, makes sense. And we're honestly looking at doing the same thing, setting up a line of credit in Canada, buying in cash, and then seeing where it goes. Just the same as what you said, seeing if we can make it work in a corporation down there, and working through the interest rate on the 30-year. If you can get it fixed, that's great.
Yeah. It may be worthwhile for you, because you're just starting out in this process, and I'd love to offer, if you want to connect with me privately as a REWL advisor, and then I can at least make sure you're going down the right path if you want.
Yeah, sure, that'd be great.
Okay, awesome. Just email info@realestatewealthlab.com, and then we'll set up a Zoom. And congratulations, taking action. Anything else?
Do you have any questions?
I don't know. That was the one I was really curious about.
That was the one on the top of the list for today. Thank you.
Give someone else a chance.
Yeah.
Awesome. Oh, Allison, now everyone's asking. Oh shit. Okay. You're right, Allison. That's fair. So, okay, so we need to do an event too to walk through it. Yeah, okay, well, we can do that. That doesn't, still contact me, Duncan, and Allison, we can talk about it too. I'll hold that promise for sure, and we'll obviously dig into this even more. And especially now, isn't it? It's interesting. Okay. Anybody else? Raise your hand or pop it in the chat to be unmuted for questions. Quiet bunch today. Oh, Lisa, how did you find private lenders to lend on a U.S. property? Relationships. It wasn't a private lender institution. It was private money from, yeah, friends, family, that kind of thing. Now that said, no, I'll leave it at that. Yep. And your network is your net worth. There you go, Allison. Yeah. Yeah. Catherine, when I was looking to buy in the USA, I found different areas that had different lenders who are more friendly to Canadians. Yeah. Yep. And I actually don't, I mean, I know who I've been working with and that's worked with me, but I'm not saying that that's exclusive, but there's even others, but I have worked with RBC in the US. So there's RBC Canada and there's RBC US. Oh, Catherine, okay, unmute. There you go.
We'll try the video until it blows up at me. trying to buy something in Mexico. There's a company called CBI. They are a Canadian mortgage lender who lends internationally for Canadians, but they'll lend in Canadian dollars, and it's at a lesser loan to value than you would get normally, but it is an option if you have some cash.
Awesome. Thank you, Catherine. And I'm glad to see your beautiful face for just a moment while you've got your Mexico internet.
Yeah, it's starting to go out again, so bye. I'm still here, but no more video.
Perfect. Can you pop that in the chat? I heard CBI. Oh, and Anita, you're putting it in there. So it's CBI, it looks like, for that. Thanks. See, this is a great community. Look at that, already sharing. Lisa, you're asking, do they have to be U.S. citizens? And I think that's with regard to CBI. I'm not sure. I think making a sort of coaching session on how to buy in the US could be very beneficial. And okay, right. Hey team, are we hearing this? All right, okay, got it. Recorded. Roger. Yeah. And you know, I'm gonna actually reiterate. So we will, but I'm reiterating something. So we can do that. And I also want to reiterate something that we've been talking a lot about. And it's good to learn how to do it and know the ins and outs. And look at all the people who are freaking smart in this room, who all want to be investing in the US, who are all starting out, not all, but some starting out. How do we leverage that and work together? How do we collaborate, not compete? How do we, not that I'm suggesting that's even competition, but what about collaboration? And what about this concept of don't do it yourself? Like maybe there's, you know, a couple of people in this room they focus on the US, and then work together, collaborate. Don't do that yourself, but then you take your expertise and then you share that. You know what I mean? Oh, well, cute. Thank you.
Jennifer, just so you're, CBI actually stands for cross-border investment.
Ah, cool. Thank you, Catherine.
You're welcome.
And Naran. I'm writing that down. Cross-border what? Investment?
Cross-border investment. And Catherine, if I've got the wrong CBI, just for the chat.
Yeah, no, Mark, why are you joking? I'm starting on our read joking. Exactly. Well, there again, see, we've got, like, for example, at our last Market Leaders Lab with Aurelio, like, he's got that niche. So work with him on the REIT, unless you want to create one yourself, or other REITs that are already up and running. And then, you know, work with just, there's so much for us to work with. It seems to be only for Mexican properties. Oh, Allison, we're already checking it out.
I think Catherine has her hand up again.
Okay, go ahead, Catherine.
I also found out in Mexico that if you're willing to put in time and build credit, like a year, so get a credit card, build up your credit in here, banks down here will lend to you. So everybody who says, like, if you're going to the US or another country or whatever, and you can't get credit because you're a Canadian, it's not true. You just may have to put in time if you want more of a traditional mortgage. Otherwise, you do have to go other routes.
Right. Thank you, Catherine. Look at all this in the trenches international experience. Yeah. The Great Refuge is a great refuge in some cases. There's been a lot of interesting migration trends these last few years. 2 years. What other questions or any topics that you want to talk about? You need to get an ITIN, so a TIN number to build credit in the US. I don't know. I have a TIN. That's why I don't know the answer to that. When I was 22, I was I was working for Canadian Pacific Railway in Calgary, and they promoted me to work in Detroit, and so I got an H1 visa, and that's how I got my TIN number. So it's always been, I've been very blessed because that just makes everything easier. I'm like, you got the TIN. I'm like, I actually happen to have a TIN. Thank you. So I don't know the answer. Okay, well, what? Go ahead, Naran.
No, I was going to say, I believe we are at the end of our event, and although we still have 40 people on this call, I think nobody wants to miss anything, just in case.
I know, right? So maybe what we could do is, well, we've got our community lab. So what I'm getting the sense is everybody wants like a group hug here. And so we've got our Market Leaders Lab on the second Wednesday. Our community lab is going to be the following Wednesday. Remember, the community lab is far more interactive. So we'll definitely have it set up if we can, folks, the Real Estate Wealth Lab, to make sure that we can have it so everybody can be unmuted at their own leisure. if possible. That would be great. And we'll make sure that we try and take more time for Q&A. So, you know, depending on how things go, so that we can have more conversations. You can make that commitment. Hey, Naren?
That sounds great, Jennifer. That sounds awesome. Thank you very much, everybody. You've been an excellent listeners and participants and action takers in this group.
Yeah. Yeah, and thank you. I've actually just taken all of the chat notes and I'm going to go back and read through them. I do that after every call, by the way, to get your ideas, to get your information, like not your information, to get your ideas, to get your insights into what you want to see next. And then also, particularly for today, I just want to go back and get a litmus test of, you know, some of what your questions, the answers to the questions that I was posing earlier with regard to political climate. So just remember, the Real Estate Wealth Lab has your back always.
Absolutely. And those of you who live in the GTA, Toronto, Canada, if you live here, send me an email. Let's get together sometime at a pub or something like that. Now the restaurants are open.
Naren is our designated extrovert.
Yes.
Believe it or not, I am not one, but I do love small groups of people. So there we are. And
I love large groups of people. So perfect.
Okay, well, yeah. Thank you everyone for joining us and take care. We'll be in touch very soon. Again, share this with your friends. Make money, become an ambassador, get your membership for free. You only need 9 people, 10 people or something like that. I'm so bad at math in my head. In order to get your membership basically paid for. So we're new and we're here for you. And have a wonderful day. Bye everyone.